Now I get asked a lot around what previous properties I've bought for clients, what sort of properties I'm buying at the moment, and what I've been buying in the last 12 months for clients. So in this video, I'm going to share with you just 5 random client successes that we've had over the last year. And I want to share some numbers around what we've been purchasing, because sometimes people come on the comment section and be like, where are you purchasing 200, 300, 400K properties in Australia in 2021, Ravi? And it's still profitable. So in this video, I'm going to break it down with everything from rental yield to cash on cash return. And you can make up your own minds whether it's worth getting a buyer's agent, whether it's worth investing into real estate. And of course, none of it's financial advice, but I think it's a really good eye opener for all of you. Keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button. We talk about cryptocurrency, real estate, and financial freedom on the channel. Occasionally I'll talk about accountability and self-awareness. So if you are interested in content like that, then you should definitely subscribe. Now, before we continue, we need to share these videos out to more people. So if you can smash that like button, get the YouTube algorithm sharing it out to the people that need it. Now we know real estate's going through a really big boom, but the thing that people don't realize is I was making content for the last 12 months about how the real estate boom is about to come. And obviously we're in it now, so it's great to look back and say, well, you were making videos 9 months ago and talking about this stuff. It's now playing out. That was the main reason I started bringing out content, because there's so much there that I research and think about and look at after hours. I wasn't able to share that with everyone at scale. And so YouTube played a beautiful part in that. And that's why I was saying on the top of my voice, guys, do not look at the media headlines and what they are saying is going to happen, because everyone has an agenda, right? For me, bringing out content like this, I had no expectations for you to come and book my services or book a strategy session if you needed help, or come on as client, as a buyer's agent, right? But what I was more focused on was allowing you guys to get educated in the space, because it's not all that it seems. When you turn on Channel 9, 12 months ago, it was literally doom and gloom. Then YouTubers came out and they started saying,
oh yes, we definitely agree. Read some articles and it was doom and gloom.
But unfortunately, it didn't go past the basic economics of what was happening in the environment of the economy and what that meant for real estate. So now we've seen some significant growth. I still think we're early. And if you want some, sense of credibility, it's looking back at those videos. What was I saying? What are the things that are happening now? And what I'm saying in these videos lately is what I think is going to happen and what I think is the biggest opportunity in the next 3 to 5 years. So again, don't take this as financial advice, nor should you think this is a salesy pitch to try and get you to become a client. I'm simply just sharing our successes, the client successes, which means the world to me, because financial freedom for myself, I feel like I've unlocked it already. I do what I love and I live on my own terms, but it's about helping others like yourself to get to that point of financial freedom. So if you're interested, book in a strategy call or kick back and just see some of the results these guys have got, because it's honestly amazing, because they bought when others were fearful, and this is when they're getting the rewards of what they really did put in the hard yards for. So let's kick in. Now this property is in regional Tasmania, a 3-bedroom brick home, and purchased in March 2020. So we're going to run some numbers here. It was purchased for $237,000 and was renting at the time for $260 per week, which meant a rental yield of 5.7%. Now 9 months later, we've had a bank valuation come in for $275,000. It's now renting for $285 per week, and the market value, which is more reflective on what we can sell it at today, is between $300,000 to $315,000. So the initial investment, or the initial cash that was put in, including the cost and the deposit, was $50,000 for this deal. Now that equates to 29.9% capital growth. Wow. Before we sort of jump into the next sort of deals, and I've got 5 in total that I just picked randomly, it's that return on investment. So when I'm talking about cash on cash, when you go and put, say, $50,000 into the share market, you're putting $50,000 into purchasing $50,000 worth of asset. With real estate, and this is by far one of the biggest advantages of getting into real estate, is that you can use the $50,000, leverage that, because you can go to the bank and get a loan, and they will give you 80, 90% of the entire asset value. and you get the benefits of the entire asset growing. Now, of course, you get a mortgage out, you've got to pay the repayments, but interest rates are at all-time lows, and I don't think they're moving anytime soon. So that is why a lot of people are finding such great returns. Now, in this case, when I'm saying cash on cash return, that means this person put in $50,000 as their initial cost to acquire this asset, and after 1 year, they've earned 76% of that as a return. That essentially means that they've put in $50,000 and they've almost doubled their money in the space of 9 months in this case. Now, the reason for this and the results that we're receiving and achieving in these markets is because there's so much research that goes into it. This is not just by chance or coincidence.
Oh yeah, I'll pick over there and I'll buy there because, you know, on news or, you know, on Channel 9 it came out that this is the best place to buy.
It's none of that.
Right?
And a lot of people will come up and they say, okay, well, it was due to COVID. That's why everyone moved regionally. No, that's not the case either. This stuff's been happening for a long time. Definitely check out this video, which is a breakdown of my property portfolio that I've been purchasing for the last 6-7 years. And the principles have not changed. The idea is that we need to adapt to different markets, and people get too emotional. They get great results in one market and they say, oh, I better go back there 3 years later and purchase again because I know the area. Unfortunately, if you're looking at real estate and investing properly to grow real wealth and portfolios, then you've got to achieve this by looking at markets in a most logical and financial way rather than getting emotional about it and going,
oh, the kitchen, oh, it doesn't look pretty, I'm not going to live there.
Now, property number 2 is in regional Victoria, and this is also a 3-bedroom house purchased in September of 2020. Now, this was purchased for $255,000. At the time, was renting for $320 per week, which meant a rental yield of 6.5%. 6 months later, the bank value came in at $280,000. The rent went up to $345 per week, and the market valuation we believe could sell for anywhere between $310,000 to $325,000. Now, to get into this deal, the client put in $55,000, and that equated to a 24.3% capital growth appreciation. This is absolutely crazy when you're actually looking at these numbers. If we had no capital growth, you're earning a rental yield of 6.5%. After all of your costs of holding and the tax you're paying, you're still earning more than if you were simply to put it into, say, something like shares, or you were to just leave it in the bank and save your money. So the fact that you can not only get cash flow, but you can also get capital growth is something that traditional investors will never understand. It's always been believed that, oh, well, I'm going to invest in capital cities because we get negative gearing, so I can save some tax at the end of the year. And those are the properties that grow. The stuff that's, you know, got a high rental yield means it doesn't grow. We've seen 2 examples here, and as you go through the rest of this video, you are going to see other clients, the successes they've had. And the truth is, it comes down to research. It's not about approaching this as a broad market and Australia is just one market. We look at a few stats and then we jump in and purchase, because I hear it a lot. How hard is it to actually buy real estate? It's not that hard. You know, you pick up the phone, you look at something on realestate.com, you go,
well, that looks like a nice property.
Call up the agent does their thing, and you suddenly go,
well, this seems like a really good deal.
So now you go in and purchase that property. 2-3 years later, you wonder, why hasn't my property performed as well as those ones or those ones? The thing is, you need to look at the macro, which is the economy, and then come deep dive into things like the street. The street that we're purchasing on is something that we even look at. So if you're not doing that sort of research, and I say this in my strategy sessions as well, if you are looking at doing it yourself, it's not impossible, it just takes time. When you're in a market like this today, markets are moving super quickly, right? You can go onto realestate.com and most properties are under offer, already sold within a couple of days of being listed. So if you're in a market like that, what is it actually going to cost you? If the market moves up by, say, 10, 15% in a year, some of these properties we've purchased have moved up by 20, 25% in 1 year alone, then you've got to really ask yourself, what am I missing and what's the opportunity cost? If you're paying a buyer's agent, whether that's us or someone else, what is the opportunity cost here? Because you could be out of the market for 6 months, and 10% on a 300K property means that's $15,000 in the next 6 months that you've already fallen behind. That is the opportunity that you miss out on if you simply stick to the traditional way of investing and that thought process that,
oh no, I can do this myself. How hard is it?
Property number 3 is a 4-bedroom brick house in regional New South Wales, and we purchased this for the client in November 2020. So we purchased this for $260,000. It was renting for $320 per week, which is a rental yield of 6.4%. Now, 5 months later, the bank comes in with a valuation of $285,000. The market valuation we expect is about $330,000 to $340,000. And the rent is still $320 because they're on a long-term lease. And the initial cost to get into this deal was $57,000. So the capital growth for this property was 28.8%. Guys, looking at these numbers, looking at what's in the market at the moment, some of these properties were purchased off market. Now, this is something that I talk about in some of my videos, but I extensively cover how to really structure yourself when you're researching for property, as well as the debt that you're acquiring and how you can use that to leapfrog into building a portfolio in my online course, Confusion to Clarity. If you feel like, you don't want a buyer's agent and you want to learn the basics yourself, then definitely go into the link in the description below and sign up to Confusion to Clarity. There is no surprise in terms of when I'm looking at these numbers, the clients, they come back and they're like, oh my God, like it actually performed better than what you expected. And the truth is, it's always about coming back to the numbers. At the end of the day, I've gone in, done it time and time again for myself, and now I'm helping clients do it as well. Without trying to sound so salesy, at the end of the day, I would much rather you approach a reputable company where they've got credibility around themselves, rather than click on to any of the Facebook or YouTube ads that pop up and they say you can make this much money in a year. I know sometimes when you're looking at these numbers, you're like, I can't believe those are the numbers. And sometimes when it's too good to be true, it's too good to be true. Fortunately, in this case, I've tried to be as credible and transparent with you at every step of the process where it comes to purchasing property, even for myself or for my clients, now showing you exactly what these performed at, but also me in terms of the channel itself. I've almost got 100 videos on this channel and I discuss my own personal strategy openly as to how much money I'm putting into crypto, how much money I've got in real estate, and I don't think anyone else is doing it at that point. The reason for that is because I know what it feels like. When I started and I was unsure about, do I really want to pay someone for this sort of advice? What sort of, results will I be getting? And the truth is, these are just some random results that I found over the last, 6 to 12 months. And I've gone, let's just put it together as part of a video. I didn't cherry pick them. Some of the properties that we've bought, they've actually performed really, really well. And I wanted to include them. But at the end of the day, it's not about cherry picking some of the results and just showing you that and go,
look how amazing we are.
It's just to show you that traditional investors, they only show you one thing, and 99% of people are covering that. I'm here trying to bring to light that there is another way in this. And especially when you're starting out in your 20s and 30s, you want to have lifestyle. I've said this in videos time and time again. I'm not an investor that goes there and goes to sleep at night thinking,
oh my God, like if I lose my job tomorrow, how am I going to afford to pay the mortgage repayments?
It's not about that. It's about how you can acquire good assets in good locations with strong cash flow that can take care of themselves while you go and enjoy, doing what you love, lifestyle, and then come back in 5, 10, 15 years and you see this machine that's grown. That allows you more choice. It allows you to pursue something you're more passionate about. And before I ramble on any further, drop a like for the video and let's kick into the next one. So number 4, a 4-bedroom brick home in regional New South Wales. We purchased this one in October 2020. This one was on more of the cheaper side, so $226,000. It rented for $285 per week and the rental yield was 6.5%. Now, 6 months later, the bank valuation came in at $250,000. The market value is between $255 to $270, and the rent achieved now is $295 per week. So the total cost to get into this deal was only $47,000. The capital growth was 16.3%. You're seeing a trend here, guys. It's that I'm not looking at properties that are worth $800, $900, $1 million. And I'm definitely not looking at capital cities like Sydney and Melbourne, because traditionally we've been taught that's what we should look at. I'm also looking at brick homes. I'm looking at houses. So that's 3, 4, 5-bedroom homes. I'm not looking for a cardboard piece or shoe space in the middle of inner Sydney, because apparently that's going to grow. It comes down to numbers. I've said this time and time again, where you look at supply and demand. If the demand is outstripping supply, and it looks like that is going to be the case for the near future, well, that's what we want to be in. We want to be investing in these areas that not only give us the capital growth, but also that rental growth. Number 5 is also another 4-bedroom home, brick home in regional New South Wales. We purchased this one in August 2020. and we purchased this one for $255,000, renting for $335 per week, and that's a rental yield of 6.8%. Now, the initial cost to get into this deal was $60,000. The bank came in at a valuation of $325,000, and the market value is anywhere between $340,000 to $360,000. That means a capital growth of 37%. So something to note as well, the capital growth numbers, they're kind of skewed here because we go in, based on our research, we're buying under market value. We know the fundamentals of the area, but we also know, based on comparables, based on what is selling, what has sold, we know what we're ready to pay, and we have a really good indication of what the bank will possibly come back at in terms of a valuation, say 3, 6, 9 months later. So this is why we're seeing huge numbers, and the reality is that when we purchase the property, we're probably purchasing it, $10,000 or $15,000 below market value. And so despite the numbers being 20, 30% capital growth in a year, it's probably more like 15 to 20% for places that you've probably never heard of. Compare that, people getting roped into first home buyer schemes and purchasing house and land in the middle of nowhere, or they're purchasing apartments off the plan. At the end of the day, the numbers make sense. The reason I can sit there confidently, know what the strategy looks like, and stick to it with a client long term is because I know we can achieve these numbers. Now, at the end of the day, we know that we're seeing this market move very quickly, and we also know that prices like this, they don't last in the market too long. So now what I'm seeing is properties that were listed probably 250 to 260 are now coming in at the early 300s. And depending on what location you're in, you pretty much look at what is called a property clock, and you don't want to be buying at the height of the market. Most people though are going to fall victim to this, where they think because so many people are buying and we've seen significant growth in the last 12 months that we are at the top of the market. Now it's risky. I can tell you now, based on my own opinion, my own experience, and my years of research, we are nowhere near the top of the market. I personally believe that a lot of these properties are still undervalued, and I think what we're going to see is the next 3 to 5 years of massive, massive growth before we could possibly see interest rates movement and also some regulators sort of coming into the market to cool it off. But I think it's a fantastic time to get into real estate. Debt is cheap. If you know how to use it, again, non-financial advice, but you can really leverage that growth and double, triple, quadruple your money in the next few years. But again, do your research, do your due diligence. If you want to learn how to do it yourself, and I definitely advise you to learn it yourself, definitely go subscribe to the channel, but also go and enroll yourself in the Confusion to Clarity online course. It's more than 3 hours of exclusive content across 4 modules, and it's created by myself. So definitely go and enroll in that, and I'll catch you guys in the next video. Thanks, guys.